Creating generational wealth through real estate investment involves a long-term strategy that focuses on building, maintaining, and transferring a portfolio of appreciating assets. This approach requires careful planning, disciplined investing, and leveraging real estate's unique benefits, such as equity growth, cash flow, tax advantages, and the ability to leverage borrowed capital. Here's how a rookie investor can build generational wealth through real estate, and a detailed, real-world example of someone who achieved this. Step-by-step strategy for generational wealth creation. 1. Start with a clear goal. Decide what generational wealth means for you: enough passive income to support your family, a large real estate portfolio to pass down, or both. Establish a timeline and milestones. 2. Leverage a long-term mindset. Focus on buy and hold properties for steady cash flow and long-term appreciation. Reinvest profits to expand your portfolio instead of spending them. 3. Use leverage wisely. Utilize financing, like FHA or conventional loans, to purchase properties with little down, allowing you to acquire assets without large upfront costs. Refinance to access equity for future investments while retaining ownership of appreciating properties. 4. Maximize cash flow. Invest in multifamily properties or properties with house hacking potential to generate positive cash flow. Use property management companies as your portfolio grows to maintain efficient operations. 5. Focus on tax strategies. Take advantage of depreciation to reduce taxable income. Use 1031 exchanges to defer taxes when trading up to larger properties. Utilize cost segregation studies for higher depreciation deductions. 6. Diversify within real estate. Invest in various property types like single-family homes, multifamily, and commercial properties. Diversify geographically to reduce risks tied to local market fluctuations. 7. Plan for wealth transfer. Establish a living trust or LLC to simplify inheritance and reduce estate taxes. Educate your heirs about managing and growing the real estate portfolio. Detailed real-world example: how one person built generational wealth. Investor John Williams. Background: John Williams started as a middle-class factory worker in Newark, New Jersey, with no prior real estate knowledge. At age 28, he decided to start investing in real estate to secure his family's future. Step 1. Entry into real estate. First property. John purchased a duplex in Newark for $250,000 using an FHA loan with only 3.5% down, which was $8,750. He lived in one unit and rented the other for $1,800 per month, which covered most of his mortgage. Key takeaway: house hacking allowed him to minimize living expenses while building equity. Step 2. Scaling the portfolio. 3 years later, John refinanced the duplex and pulled out $50,000 in equity. He used this as a down payment to purchase a fourplex for $500,000 in Trenton, New Jersey, which generated $4,500 per month in rental income. By reinvesting his equity, John increased his cash flow and grew his portfolio without significant out-of-pocket expenses. Step 3. Strategic upgrades. After 7 years, John sold the duplex for $400,000, making a profit of $150,000. He used a 1031 exchange to buy a small apartment building in Hoboken, New Jersey, for $1.2 million. This building provided $8,000 per month in rental income. The 1031 exchange allowed him to defer taxes and reinvest in a larger property. Step 4. Diversifying the portfolio. At 40, John purchased a mixed-use property, retail on the ground floor and apartments above, in Asbury Park, New Jersey, for $1.5 million. This property generated $12,000 per month in income. Diversifying into commercial real estate provided higher returns and more stability during economic downturns. Step 5. Wealth transfer planning. John placed his properties into a living trust, ensuring his children would inherit the portfolio tax efficiently. He also taught his children how to manage and grow the portfolio, ensuring continuity in wealth building. By age 48, John had built the following: an apartment building in Hoboken valued at $2.5 million, generating $96,000 per year in rental income. A mixed-use property in Asbury Park valued at $3 million, generating $144,000 per year in income. and a fourplex in Trenton valued at $800,000, generating $54,000 per year in income. His total portfolio value was $6.3 million, with annual passive income of $294,000. Key lessons from John's journey. Start small, using house hacking or FHA loans to enter the market with little money down. Reinvest profits to scale your portfolio by leveraging equity and reinvesting income. Leverage tax benefits like 1031 exchanges and depreciation to minimize taxes and grow faster. Think long-term, focusing on buy and hold properties with strong appreciation potential. And educate your heirs, teaching your family how to maintain and grow the portfolio to ensure wealth lasts generations. Creating generational wealth through real estate requires a disciplined approach, patience, and a focus on long-term gains. Even rookie investors can follow John's path by starting small, reinvesting profits, and strategically scaling over time. Would you like specific advice on how to start building your own real estate portfolio?